Hey folks, Dan Frio here with your market update for November 21st, 2024. So today's news, basically the headline news is the unemployment numbers. So that's what we're going to talk about right now. Those came in actually pretty nice. And then NVIDIA earnings came in. We're going to show you where those are and how those are helping the market. And then Bitcoin is this close to $100,000. So get to it. So mortgage rates right through here. Here's the top 6 programs people use when they're buying their first house. Now, just want to go over this. I do it every once in a while, but these rates, they're not my rates. They're not any individual bank's rates. What are these? Well, these people over here that are showing up, there's 5 criteria for you to get these rates. 3 of them are this. You're buying your first home, it's a primary home, and you're going to live there, meaning it's your primary residency. And it's a single family home. Let me rewind those again. The first 3 are this. You're buying your first house, it's a single family home, and you're going to live there. Okay, so that's the first 3 pieces of that puzzle. The next part of that is right through here. How much money are these guys putting down, and what are their credit scores? Because that's 2 huge pieces of this puzzle. Right through here, these people are putting down 25% because they're getting a loan for 75%, and they have a 780 credit score. So if that's you, well, that's most likely where your rate's going to be. If that's not you, I'll give you all my information at the end of this video, because I'm just a lonely old mortgage guy out here trying to win your business. So let's get to the news today. Right through here, the headline news is jobless claims came to a 7-month low. A lot of people were really worried about the job market just crashing. It's holding up pretty darn good. So that's helping the markets overall. Jobless claims dropped to a 7-month low as U.S. economy plows ahead. So that's what we're seeing so far there. The headlines everywhere else is NVIDIA. NVIDIA earnings came out last night. They blew out the numbers, and then also Bitcoin over here is just this shy of $100,000. So that's what's taking basically the headlines right now. But let's dive in really to the economic news that we have today that's really not that much, but I'll explain it to you. Continued jobless claims. Last reading was 1.87. It's at 1.9. That's what's causing the concern. It's like, okay, the continued claims are there. But if you go down through here, initial jobless claims are holding steady. Last reading was 219, expected 220. It came in at 213. So that's okay there. Then you have Philly manufacturing. This is where it just fell off a cliff. The last reading was a positive 10. So meaning manufacturing was really robust. It's actually pulled quite a bit back. You're seeing right through there at a negative 5.5. But nobody's really going to pay attention to any of this stuff. All they're going to do is pay attention to the claims and the state of the economy, which you're seeing right through here. So if you want to just get a glance of the economy, just as on one website, just go to or Google federalreserve.gov, and you're going to see this. It's basically telling you all the aspects that the Federal Reserve monitors. So right through here, you're seeing the federal funds rate. That's the one rate that they control. The rate that they control, the federal funds, is the federal funds rate. It's not mortgage rate. It's not car loans and not credit card loans. It's federal funds rate. Basically, what that is when one bank needs money, they go to another bank, and that's the rate that they pay. So that's that part of it. You have the PCE. This is the inflation number that the Federal Reserve has the most confidence in. And it went from 7, it was about 9 or so, but all the way down to 2.1. So that's what we're focusing in on. That number is real good. Unemployment rate is staying consistent at 4.1. And then you have a GDP right over my head at 2.8. So everything across the board is showing signs in the economy. Let's get over to the bond market, see how that's faring today. Right now, bonds are up 11 ticks. So if you're new to the channel, how this works, this is a mortgage bond that we follow. So most charts are going to show you what the interest rate is. This one, for some reason, gives you the price. So what we have to do is dissect, how does this relate to the rates? So right through here, this is the price of a mortgage bond. So all you need to know is this: as the price goes up, yields come down, and as prices go down, yields go up. So let me do this. I do this probably once a month to explain this to you. Let me give you an example. Okay, so if you're a regular viewer, you can skip off to the next section. We're going to go over to the CME FedWatch tool and then talk about some things we have upcoming. But here's how this works. Okay, so let me explain how if the price goes up, the yield comes down. All right, so let's say, for example, the mortgage bond that I'm buying from you right through here, it has $100 face value. So when I turn it in, when it matures, and we're going to say it matures next year, when I hand it in, I'm going to get $100. Okay, so it doesn't matter what I pay you now. At the maturity, I'll get $100 back. Okay, so let's say this. Let's say I pay you $50 today. All right, I pay you $50 today. You give me the coupon. You give me the bond, and then next year I hand you the bond back. You give me $100. Okay, so I paid a low price, $50. You give me $100 back. So what was my return? I doubled my money. It's 100% return. So let's make it simple. Let's drive that price all the way up to $100. Okay, so I give you $100 today, you give me the bond. Next year, I give you the bond back, you give me $100. You're thinking, why would you do that? Well, exactly, but I'm showing a point. As the price goes up, that yield now is 0. So at $50, the low price, my yield was 100. As the price goes up, I basically brought it to 0. So that's how the bond market works over here. Just so I want you guys to explain. So you can see this is live ticking. We're now up 10 ticks. So that means mortgage rates are going to come back down. We should be in the 6.9 range by the end of the day if everything stays consistent. The next thing we're going to look at is the CME Fed Watch tool. This is actually going to tell us what the Federal Reserve, I guess, is expected to do at the next upcoming meetings. As we saw in this, the federal funds rate right now is 4.5 to 4.75. So when we go to the Fed Watch tool, we're right here. We're 4.5 to 4.75 right here on the mark. So now this is saying there's a 44% chance Federal Reserve's not going to do anything. And there's a 55% chance that they're going to cut rates 0.25%. Now the odds are increasing in January and maybe in March that they're going to do it at that point. So now the markets are saying, what's the Federal Reserve going to do at the next meeting? And honestly, I don't know at this point. I think they'll stay on their projections of 0.25% cuts, but it's not baked in and it's not a given at this time. So what do I expect from mortgage rates? I expect them to be basically stagnant right now because there's so many moving and changing things, dynamics going on in the market right now. A new president is coming in. We have all new staff members, everything there, going to work on the budget, hopefully. And then there's just a lot of things taking place. We're going to look at housing permits and so forth. So join me every day so we can take a deep dive into real estate on a daily basis. So I will be back at the closing bell, let you guys know how all this mess ended for the day, especially rates. Are we going to get back down into the 6% ranges today? And the only time's going to tell. So if you like some help or you need some help financing a home, if you're looking to buy that first house, maybe buy that first investment property, you're looking to refinance. Here's what we have. I think I took 3 applications yesterday. People have homes with tons of equity. Some of them are even paid off. They're pulling equity out to buy investment properties. I'm not saying it's a good idea or a bad idea. I'm here to help you, though. So my name is Dan Frio. Visit us at therateupdate.com. If you want to put in an application, you can do that right through here. If you want to check out, see any grants out there that maybe offer you some free money for if you're buying your first house, check those out. There's national grants and Chicagoland area grants. If you have a loan estimate you want reviewed, upload it right through here. And I'll review it and get right back to you within 24 hours to let you know what we could do for you in that situation. But we just added this. If you want to schedule a call, a one-on-one consultation call with us to go through any questions that you have, like we usually do on our live events, you can click this right here and it'll launch you right to me, Alan, and Dave. That's our whole sales team. Believe it or not, that's it. You're not going to go to a call center. It's just the 3 of us. So you can pick and choose who you want there based on their availability. So that is my report for the morning. If you scroll down right through here, you can find our 800 number as well as my email address. So it is right there. Thank you so much for watching, guys. If you have any questions or concerns about buying that first house, please reach out to us. We would love to help. Thanks for watching. See you later today. Bye-bye.